The $30 billion meltdown for Archegos Capital is just the beginning. You've got Congress pleading and crying for more regulation. You've got the SEC wondering, what happened here? Could we have caught it? Hedge funds are bleeding until they can't move any further. And the retail investor is holding strong. Guys, this is so much bigger than just AMC stock. This is so much bigger than just GameStop. The financial system investing is going to change forever, and it's because the retail investor is tired of being taken advantage of. We're finally doing what we need to do, and in this video, that's exactly what we're going to be talking about. We're going to be talking about what's going on here, why hedge funds are starting to get scared, what banks are realizing, and why they want more regulation. So if this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. You already know we're making this the best year ever. If that subscribe button is still red, make sure to subscribe to the channel and become a bro. Now, I know a lot of you out there are holding AMC stock. You're holding GameStop. We want to see the short squeeze, and I believe that the meltdown for Archegos Capital Management is only the beginning. We're one step closer to finally seeing that squeeze happen. Now, why is this? You can look at Archegos. Yes, it's not directly related to AMC stock, and yes, it's not directly related to GameStop. But what is it directly related to? It's directly related to banks lending out more money than they should, to hedge funds overexposing themselves to sketchy derivatives and things like this. So let's talk just slightly about what Archegos was doing, why it's a little bit different than what we're seeing with AMC, and where we could go with AMC because of what happened with Archegos. So Archegos was using what's called contracts for difference, and this basically means that they were leveraging themselves at roughly a 5 to 10 times leverage and saying that they were betting on the difference in price at a future point. Now, a lot of the underlying securities like Viacom that we saw sell off on Friday is because this hedge fund was so overexposed. And we call it a hedge fund, but they were technically a family wealth company, okay? They didn't have the same regulations and the same forms that they had to fill out as major hedge funds do, and therefore a lot of the stuff that they were investing in was able to go unregulated, right? Now this has the SEC and this has the government all in a turmoil because you know what the government loves and you know what the SEC loves? They love to be in control. Whether that's controlling the hedge funds, okay, whether that's controlling the retail investors, the government needs to be in control. It's as simple as that. When things start to happen that the government isn't planning or that the government isn't in control of, they get nervous. They're seeing it with the hedge funds right now, right? Okay, the hedge fund busted. They've got their margin call. SEC and the Congress, they're scared. When the retail investors started to work together and buy AMC stock, when they started to buy GameStop and work together, what did the government do? The government got scared and they wanted to start regulating retail investors. It's like, guys, make up your mind. Whose side are you on there? Are you on the side of the hedge fund? Are you on the side of the retail investor? You always say that you want to protect somebody, but you know what you're protecting? You're protecting your own interest and you're protecting the control that you have not only over the people, but over the businesses and over everything that there is. So that's why we're seeing, the nervousness from Congress right now. We're seeing nervousness from the SEC because they need to be in control. It doesn't matter if you're making money. It doesn't matter if the hedge funds are making or losing money. They need to be in control of that. So that's what's going on with the SEC right now. What's going on with the banks? The banks are realizing that they were starting to loan out some shady money. Right? The banks are loaning to hedge funds that are doing things that they shouldn't be doing with their money, right? Now the banks need their money and therefore they're going to start calling these hedge funds out. Whether the SEC does it and asks for more regulation, the banks are going to start realizing, well, shoot, if this bank lost $2 billion and this bank lost, $300 million, we're not going to put ourselves in the same situation. And once we start seeing this with hedge funds like Melvin Capital, and once we start seeing this with hedge funds and banks and institutions that were shorting AMC stock and we're shorting GameStop, what do you think's going to happen when these banks start to say, yeah, we feel a little bit overexposed. I think that you need to give our money back. The hedge funds are going to start panicking. Right? And then when they start buying these positions back, that's when the short squeeze is going to happen. So it could actually happen a lot sooner than expected due to the fact that Archegos Capital got margin called, right? If we start to see new regulation come out of the SEC for new disclosures and all that, we can conspire all day about how shady, hedge funds are being and whether or not they're reporting everything and whether or not the banks are in bed with the hedge funds and everybody and all this and that. But look, I said it in the last video. I'll say it again. At the end of the day, everybody wants their money. You want to make money, they want to make money. Unfortunately, in the stock market, if you're playing both sides, if one guy's selling and one guy's buying, guess what? One guy loses money and the other guy makes money. Now, we don't want to be the ones who lose money, and the hedge funds don't want to be the ones who lose money, right? But you know who doesn't want to lose money even more than the hedge funds and even more than us because they've got a lot more riding on it? Governments and the banks, okay? The governments and the banks, think about it. If all of these hedge funds start to bust, if they start to go under, the banks are going to lose everything that they have. People are going to start panicking. The economy is going to run on banks are going to happen. Everything that you can think of. We don't need to go through it all in this video right here, but you can start to see the financial crisis that will start taking place, right? A lot of people are going to be, it's going to be bad news, right? Think of 2017, think of 2008 if you need to. It's going to be bad news. So they're going to stop this from ever happening. Government's going to come in, they're going to regulate it. They're going to say, stop this nonsense right now, sell the shares, whatever you got to do. If make the short squeeze happen, all of this. And you know who's going to be rewarded? The people that are out there left holding shares of AMC, the people that are out there left holding shares of GameStop, because you held and the short squeeze took place. Now, whether or not the price could actually go to the moon, if the government steps in, all of that is something to think about, right? Who knows what's going to happen when everybody starts to panic? And we don't want to get to that point, right? But that's what's starting to happen with the banks when they see other banks losing money, when they see 30% being wiped out of huge companies. When Viacom, it's not they call them meme stocks now. They call GameStop and AMC meme stocks because retail investors are investing in something more than fundamentals, right? So therefore it gets the name meme stock, and it's a risky gambling of an investment. You know who's gambling? Hedge funds that are out there leveraging 10x leverage and then losing 20, 30, 40, 50, $100 billion on investments. You know who's gambling? The banks that are out there lending money to people that they don't even know what they're investing in. And you know who's gambling? The government's gambling when they have rules and regulations that allow hedge funds to go out there and invest citizens' money in stuff that they don't even know what they're investing in. There's a reason why they call it complicated investments and why they call derivatives so, intricate, right? At the end of the day, it's simple. You buy and sell. That's what finance is. You buy and sell. But they start to make these things so complicated that they don't even know how to explain them anymore. And when they don't know how to explain something, that's where the risk comes into play. If you can't even get a PhD to understand the odds or the favor of an investment, you've done something wrong, right? You could go to Vegas and you could bet on roulette and the odds of winning. You could bet on a hand of poker and the odds of winning. But when you go out there and you start to layer and layer and layer your investments in such a secret and shady way that you can't even get a mound of PhDs to understand the rate of return and to understand what you're actually investing in, that's gambling. So a lot of people are starting to realize this, and retail investors might feel like they're being left out. But look, at the end of the day, when it comes time for AMC stock to be covered, when it comes time for GameStop to be covered, those that are left holding are going to be left holding a lot of money because the amount of shares that are being sold short are going to have to be covered. And whether or not, it has to take place at a certain level, if the government steps in and says, this is the maximum price that we're going to allow for these shares, I can see something crazy like that happening, right? A lot of people think that these stocks can go to infinity and blah, blah, blah. But look, the banks are only going to lose a certain amount of money. The government's only going to lose a certain amount of money. We know that somebody is going to be stepping in, but it's going to be at a price much, much higher than the current $10 per share and the current $190 per share that AMC Stock and GameStop are trading at. So guys, I want to know who out there is still holding shares in AMC, who out there is still holding shares in GameStop. If you believe that this is only the beginning, if this $30 billion margin call is only the beginning of what we're about to see here, inspire the rest of us in the comments below. We are a team. We are in this together. And the whole point is to watch our portfolios grow throughout the year. Now guys, if you found this video helpful and you want to share it almost anywhere, please. It would help so much, and tag me at Claybro. I would love to follow you guys back. I'm on almost every single platform there is, and I would love to see what everybody's interested in investing in. Now if you're brand new to investing, if you haven't gotten on the ride yet, there's a link in the description below for Webull. It is super simple to set up your account, and if you deposit at least $100, you're going to get a couple free stocks for doing so. And yes, they are handing out shares of AMC right now, so if you don't want to go out and buy a share of AMC, you can actually get one for free just for signing up and using that Webull link in the description below. Now, if the subscribe button is still red, guys, you know what to do. Subscribe to the channel and become a bro. We're here, we're growing our portfolios together, and we're here every single day. Now, until the next time, I hope that each and every one of you have an awesome day.